Hey fellow investors and fellow stock guardians. It's Tuesday, March 16th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from an action-packed mixed stock market. I looked into the stock market indices movements, researched a few 2021 IPOs inspired by a 40% jump of a SPAC's stock. I also introduced you to a watchlist worthy stock fueled by the volatility in the bond market. The Nasdaq index started the day on high notes, but finished the day not too far from where it started, but only slightly in the green. The other two indices finished the day in the red, but also barely. Investors got disappointed hearing about a 3% decline in retail sales in February. Moreover, total industrial production decreased by 2.2%, manufacturing output and mining production fell 3.1% and 5.4% respectively. Finally, the output of utilities increased 7.4%. Overall, it seems the consumption and production declines are the winter storm results that happened during February across the US. We shouldn't forget the shortage of semiconductors in the automotive industry could have led to the lower production output in the industrial segment too. Considering such drops, it is noteworthy that the market has held up as well as it has. Investors are most likely excited about the spending wave expected after the 1,400 stimulus checks land on consumers' bank accounts. On the list of the day's winner stock, a special purpose acquisition company or SPAC named Fintech Acquisition grabbed my attention. Shares were up 40% after the news broke that European brokerage platform eToro is going public via merging with Fintech Acquisition. The news came out after several weeks or months of a speculation about Robinhood app's IPO in 2021. Both companies are frontrunners in the free trading revolution and have benefited heavily from growing number of individual investors during the pandemic. Generally, user growth rate is one of the most needed traction metric and data point companies need to show to investors if they plan to go public. And it seems many companies, including eToro and Robinhood, plan not to let the COVID-19 driven growth go to waste by moving forward with their IPOs. If you remember, we also discussed Coinbase going public a few days or weeks ago. Coinbase is the leading cryptocurrency exchange that most institutional and retail investors and corporate investors such as Tesla and MicroStrategy use to buy their bitcoins. The company owns the most significant share of the invested money in cryptocurrencies in the world. Combine all the money that is flowing into the market from things such as the stimulus package and Bitcoin's hyper growth in the recent months, and think about the amount of hype and volatility that we can all expect from these upcoming IPOs. The IPO market is hot, which means more opportunities for real investors like you and I to research and invest in well-managed company. By the way, you can't yet find eToro, Robinhood, or even Coinbase on our platform since they're not publicly available. However, type in IPO in the search bar on a StockGuard and you can see the list of IPOs in any of the last few years. This year, it seems 341 companies IPO'd since the start of the year. The list of stocks gets updated as new companies become available, so make sure to check them out the next time you log in into your StockGuard account. For the loser stock of the day, let me tell you about a company I have been watching for a while. It's called Market Access, ticker MKTX. I owned a few shares in my windmill portfolio and sold them after a quick gain. The stock was down more than 1% and it has been falling from its all-time high of 606 per share. Market Access is a platform that large institutional investors worldwide use to buy bonds in the US. Its platform saves its investors the high cost of trading bonds and has been quite successful in 2020 as bond trading volume surged. It has a strong balance sheet with cash and no debt concerns. It's profitable, sales are growing, and at least from financial analysts' point of view, it is undervalued. Although looking at its valuation multiples such as price to earnings ratio and price to sales ratio and so on, the stock is far from undervalued. So there is a risk of overpaying for this stock if you invest now. This stock goes to my watch list for a chance to pick up shares, especially if the price drop continues. This is one of those long-term buys that I plan to buy and hold at the right time as a part of my Roll with Our CEO portfolio. So I will keep you posted if I pull the plug there. As always, if you like to give a stock card a try, research as many stocks that you want, such as 2021 IPOs, and receive stock pick ideas from successful investors. Sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase in one word. That's it for today. And if you like these quick market recap reports directly from my daily stock market research, I really appreciate you if you can like and subscribe and share with your fellow investors. I will see you tomorrow.